Good morning, traders. Welcome to another round of Technical Talk. Today is Monday, the 15th of November, and time is now 8:36 a.m. GMT. Aside from Spain's major index, markets are somewhat quiet in Europe right now, as are US equity index futures. Asia, however, ended on the front foot. Japan's Nikkei 225 added 0.6%. South Korea's Kospi added 1%, and Australia's ASX 200 added 0.4%. Now, in terms of currencies, the Australian dollar and New Zealand dollar pairs are strongly higher this morning on the back of positive China data overnight. China retail sales year on year came in at 4.9%, while industrial production year on year came in at 3.5%. Later on today, we have the US Empire State Manufacturing Index to look forward to at 1:30 p.m. GMT. Tomorrow, of course, we have the Reserve Bank of Australia meeting minutes, the US retail sales, and a wave of Fed speakers taking to the stage. Right, to the chart. So on the screen, we have the euro dollar, again, using the normal template. So we have the weekly time frame, the daily time frame, the H4 and H1. So on the weekly, for anyone that reads my regular market analysis will note that prime support at 1473, 1583 was taken out in dominant fashion last week, as the euro dollar ended down by 1.1%. Now, with this area potentially in the rear view mirror, we're now looking at this Fibonacci construction made up of a 61.8% Fibonacci retracement at 1281 and a 1.618% Fibonacci projection at 1237. Now, do note this is also considered an AB equals CD alternate formation. This is a pattern coined by, I believe, Scott Carney. So this is certainly somewhere to keep an eye on should we continue lower on the euro dollar. Now, onto the daily time frame. We are within Fibonacci support at 1420, 1460. Now, given the bearish close on the weekly scale, further selling is potentially on the cards, so this Fibonacci support may not deliver much to the upside. Now, onto the H4 time frame, we did note Fibonacci support between 1431 and 1444. In addition to this, we also highlighted the possibility of a lackluster bullish appearance, all because of the higher time frame picture, knowing where we are positioned. As you can see, we have come in strongly in recent hours, and we are down in the current H4 candle, down by 0.1%. Onto the H1 time frame, local support has done a reasonably good job of holding price higher at 1438, but I did highlight in the recent analysis to watch for this resistance at 1467 to be a potential area for sellers to come in. As you can see, we have just missed this line before pulling lower. The idea is we take out this local support and head for the 114 region, all based on the higher time frame picture. So do look for a close below this local support, and continuation moves to potential continuation moves to 114. Onto the Aussie dollar, we've not really got much to show here, other than on the H4 time frame here. We are testing trend line resistance taken from the high 75.32. Now, in addition to this, we have also crossed above a resistance at 73.49 on the H1 time frame, which could now resemble support and continue higher to this decision point at 74.12, 73.96. Swiftly over to the dollar yen. Again, I don't really have much to highlight on this overall market other than the weekly time frames. A potential bullish flag, and this comes in between the 2021 top 114.70 and the low 113.41. This is a considerably clear pattern. A break to the upside with a break above this resistance at 114.38 could lead to considerable outperformance, though do take note of the 1.272% Fibonacci projection at 116.09. Now, with that, moving over to the pound dollar, in similar fashion to the euro dollar, we have taken out a supply turn demand at 36.29, 34.56 last week, and this was in the form of the pair's a third consecutive bearish move. Now, with that, the double top patterns take profit objective comes in around the 131-ish region. So do keep an eye on this higher time frame structure. Overall, we are bearish for the time being. Now, on to the daily time frame. If I just zoom in a touch, we have just recently came within a whisker of touching the daily resistance at 34.49. Now, Fibonacci support is a clear concern for anyone short this market or anyone looking to get short after the break lower. This Fibonacci support on the daily time frame comes in between 32.62, 33.37. It's a considerable area full of Fibonacci ratios, so do keep an eye on this level. But overall, we do have room to move lower still on the daily time frame. Now, for anyone who did read the weekly technical market insight, you would have noted that I highlighted this area to be aware of as a potential resistance between 34.72, 34.47. As you can see, we've come within a whisker of this area before pulling lower. I am still watching this area very closely today. Though if we close below the 134 region on the H1 time frame, I will then be looking for lower prices. Look, ideally, we're looking for a close below here or a close below the quasi-monthly support at 33.63 to trade in line with the bigger picture. Now, ultimately, the target below here is around the, I think it comes in around the, I think we have the 133 region on the H1 time frame. Though before we reach this area, do take into account we have the upper edge of the daily time frames Fibonacci support at 33.37. Okay, on to the Dixie really quickly. We did break clear support, clear resistance last week at 94.65 with a clear bullish intention now to move for resistance at 95.86. And as you can see, this is joined by a Fibonacci structure between 96.37 and 95.83. Do note that in between here, we do have a 100% Fibonacci projection at 95.94. Now, for anyone who follows harmonics, will note that this is an AB equals CD bearish formation, though is counter trend. Okay, and finally, let's move over to gold. Just to remind you, we are still testing the Gartley pattern formation between 1878 and 1865. Last week was a clear bullish week for the yellow metal, though right now we are seeing sellers come in. Okay, so that's it from me today. Thank you for taking the time to be with me. Trade safe, have a productive week ahead, and I'll catch you all on Friday.